Hello traders, how are you? Vladimir Ribakov here from Traders Academy Club. Welcome to the weekly Forex analysis and forecast video. This video is for the 12th to 17th of January 2019. I hope you enjoyed the start of the year. Previous week was a very interesting week, and it looks like the market is preparing more good opportunities to us. So let's start digging deeper and see what the market delivers to us and where we could find our trading opportunities. But one step before, if you are new to this channel, first of all, welcome to our trading community. I would like to invite you to subscribe to the channel. Just follow the subscribe button below this video and remember to enable notifications so you will be notified during the week on the trading opportunities videos I upload for you. As well, I would like to invite you to join our free Telegram channel to enjoy from daily trading ideas and educational material, and to join my live trading rooms where you'll be exposed live meeting every single day, every single week to all the trading opportunities we have and we talk about, backed up with a full trading report. Both links could be found below this video in the description and in the pinned comment section. And last note, on Monday, as every Monday, we would publish the text format to this analysis and forecast. Come to the blog vladimirribakov.com and you would be able to find that published for you on Monday. Or just come back to this video and below the video in the description or in the comment section you would find the link leading to this article that will be prepared for you on Monday. And now let's start talking about all the interesting opportunities as we have them. I will start with the euro pairs. The first of the euros is the euro versus the pound. And I will explain it quickly. What do I expect here? The way I see that, the pair is currently in a corrective mode after making a beautiful structure, bearish structure to the downside. Ended up with the bullish divergence, as you can see here on the MACD. I believe we are now into corrective phase. Corrective phase could lead us into two waves to the upside or some sort of consolidation or a range before further continuation. This or other way around, in the short-term view, buys are more preferred by me. What dropping lower? What can we find on this pair? We got a 3 higher highs, 3 higher low structure on the 4-hour chart, 2 waves correction, and this trend line was broken. As you can see, nothing really happened since, and the pair does not yet gain higher highs. This is a suspicious sign by itself, which brings here two possibilities. First possibility is that it's all as a little range before one more low is achieved, a divergence is revealed, and then we go for the correction. Of course, we have to keep in mind that if the daily makes some sort of a range, we can move inside that as well. So this is definitely a possibility to follow until we will recreate some divergence here and then shoot to the upside. And assuming we are developing the correction in two waves and not in the range, this would have to build a bullish trend pattern, bullish trend structure. For that to happen, we would want to see this high broken and then basically creating the higher highs, higher lows, 3 higher highs, higher lows, and then we can talk about buy retraces. So that's the two scenarios I would follow this week. If we break this high, buy retraces. If we hold the 4-hour chart range here and it refuses to break that, then the second leg to the downside to be completed, and then further buys. So the euro pound is my first one on the list. My next one would be the euro versus the Kiwi, and a very interesting pair from my point of view. I believe we are going to complete this correction and shoot one more time to the downside to complete this bullish divergence. The way I see that, the 4-hour chart is where we got basically the cyclic mode from the top, ending with the bullish divergence, and we are now in corrective phase. As this second leg proceeds further, I would definitely start to pay attention to this divergence to form, and by breaking this rising trend line, would be looking to go with sell opportunities. I would not be surprised to see the pair trying to make one more push to the same highs, or potentially some break above this high to complete the divergence. It would not surprise me, but break below this trend and after that would or should lead for trend continuation. So from my point of view, we are now dancing still inside a corrective phase, and then would be looking for a sell opportunities. Some important levels to pay attention to. First of all, this massive resistance area, as you can see, and of course we have the next critical zones, and that's right here. That's the levels I would be paying attention to. We have the trend line meeting there as well, going through this place, and the 200 moving average, the dynamic one, as we can find here. Very, very important zones for this trade, I believe. More to come there. Next pairs would be the pound pairs, and the first one from the pounds would be the pound CAD. But before I dig deeper and explain it, if you enjoy what I share with you so far, and if you enjoy this video and the educational way of it, please hit the like button, drop some feedback below in the comment section. Your support is very much appreciated, and thank you for that in advance. So pound CAD, what do we have on this pair? We got a triple shot to the upside, which is now making the corrective cycle. And I believe that this cycle would run and complete on the coming days, weeks. And after that, we should be exposed for further continuation to the upside. So the way I see that, this was the first shot which was broken into trending structure by itself, 2 waves correction, and we are now about to complete the second leg. So I believe that this leg should be completed, and once we face here the divergence, which will be also supported by the daily divergence here as well, we can start talking about reversals and further buys. Meanwhile, the bearish pressure remains on, and I expect new lows to be achieved. What do you think about this pair? Are you bullish already? Are you still bearish? Do you trade it at all? Let me know, how do you treat the pound CAD opportunity in the comment section below. Thank you very much in advance. My next one is the pound versus the Kiwi. My long-term view is bullish. I expect the pair to continue the rally. However, on the shorter view, here is what we face. This was a bullish structure, which basically is one of the reasons why I expect a trend continuation. We got 2 waves correction with a bullish hidden divergence. Moreover, the 4-hour chart delivered for us a new trend, ready to start. So we are now waiting for the corrective phase, which we currently got, and here is what we expect next. This should, after the 2 waves, break to the upside, and then we can talk about buy retraces. And why I say should? Because the daily cycle never completed ending divergence. It is a hidden divergence, which is completely fine, but we have to remember this fact. I would not be surprised if the pair will try to make this low to clean this area, complete its bullish divergence, and then start to shoot to the upside. To avoid wrong mistakes or wrong timing to get involved with the trade, that's why on the lower time frame we have the timing with this trend, 2 waves correction, and the breakout. If this breakout is completed, we can of course start looking for the buys. Ideally, if this breakout is completed, then on the lower time frame you would see here a trending structure by itself, basically giving you a full package of verifications. If it doesn't break through and simply continue to be traded this way, then it is a warning sign that the market gives us wait for this divergence to complete. Once it does, ideally around this area, shoot to the upside. So keep an eye on pound Kiwi. I definitely find that as a very interesting opportunity. Next pairs on my list would be the Pacific pairs. Aussie Kiwi is one of them. The bullish divergence is created. By the way, I uploaded a week ago an annual forecast video. For those of you who love the longer term trading and ideas, to be involved not during the short term, not the day trading, but more longer term, and you missed this video right now, on the right top corner of the video, you will find a direct link to this video. Make sure to watch it. There are several great opportunities. One of them is also the Aussie Kiwi. So what do we have on this pair? We had a Bollinger Band ride here for more than 20 candles ride, never visited on the opposite band yet, completed the first move down, and then the slowing down bullish divergence comes in play, and we are around a massive supportive zone. Is that the end? Definitely a possibility, especially when the 4-hour chart creates here kind of extreme conditions. It's not classical ending divergence, which could still be concerned. However, we do already have the trending structure, and that's the 3 higher highs, 3 higher lows, definitely slowing down as the divergence. So the way I would treat that, I would be already looking to buy retraces with the bullish setup as long as we hold above 61.8. Why the 61.8 is critical in that case? Because if we suddenly see the market reacting in the bearish direction in one straight move through all the acceptable corrective levels, it is a warning sign, and in that case we might expect the market try and continue and dance further until the divergence is recreated, and then we can attack buys again. Okay, so we have to be very, very specific here with the invalidation, and for me the invalidation and that is the dynamic 61.8. Why dynamic? Because we don't know if this is official high or it will just try to spike through. So that's why we have to adjust the FIBO on the go. 61.8. As long as it holds, buy retraces would be definitely a nice technical opportunity, and let's see if the market agrees with us or not. Let me know what do you think about this pair, and how do you find it? Bullish already, or still expecting a new low to be achieved? Drop your message in the comment section, and let's see, how do you see this pair? And once again, I would like to ask your support back in this work, the video. If you enjoyed that and you find it useful, educational and helpful, please hit the like button, drop some feedback below. Let's continue to the next Pacific opportunity, and this one would be New Zealand versus the franc. The way I see that, we have a beautiful rally here with trending structure and a bearish divergence at the end of it. Classical ending top with a bearish divergence by itself and the Bollinger Bands ride. We also had a first move down, which was broken into a cycle movement, which makes me think we are now building up the second leg to the downside. After the 3 lower highs, 3 lower low structure to the downside and creating lower lows on the chart, I believe, on the swing lows of course, I believe we are now in some corrective phase. Corrective phase could be 2 waves and a trend continuation, or by ideal, some sort of inner movement here, slow down and continuation. Personally, I am looking for sell opportunities and expect this pair to continue lower. A very interesting fact about this pair is where the top was created. And a quick observation on the Forex Crystal Ball statistical indicator, we can see that this top is right on the 27, one of the most powerful days. Let's see that here, 27th, right on the top. Since then, a classical reversal, lower lows in the swing direction, currently bouncing from supportive area, but as we can see, the channel as well starts to form to the downside. That's what brings me in the assumption that we are in corrective phase. Sell the rallies would be my plan. Very important to say here, I can go through all the rest of the New Zealand pairs, New Zealand dollar, New Zealand CAD, New Zealand yen. They will all pretty much represent the same. There is no need to go and do overexposure. Choose any of the pairs that fit your analysis and your trading strategy the best, represents the opportunities you are looking at the best way, and try that. it's a very popular mistakes traders do. That's trying to catch all the opportunities and forgetting about overexposure. It would be great if it works in your favor. It would be terrible if it goes against. You do not want to put yourself under overexposures. Normally, it ends up pretty bad. So as you can see, New Zealand dollar, it's pretty much the same idea, and I would not waste the time to explain that. Exactly the same. Kiwi franc technically looks healthier. It doesn't mean it's a guarantee it will work better, but it is why I chose Kiwi franc. Next ones on the list. Dollar franc. What do we have on this pair? From my point of view, the way I see that, we are about to complete the second leg to that downside in this triple double structure inside this long consolidation, and the divergence is not yet in play, building up. Daily also currently without ending divergence. We don't have any structure of higher lows on the MACD. So the way I see that, we should be expecting one more low. On the 4-hour chart, we can see the trending structure clearer. It is in triple double waves. That's a triple down, that's a double wave correction. We are already slowing down with the bearish divergence, so from my point of view, this zone is pretty critical, and we should expect move down. Yes, we might see the pair trying to create fake new highs, and if we do, would be definitely looking for these opportunities to enjoy from the next sell opportunity. It's important to note that we do have the 20 candles right on the Bollingers, so we might see the price trying to dance here for a while until the upper band closing up, like we saw before in Aussie Kiwi example. But it doesn't change, at least as for now, the expectations. And as I said, new highs to be achieved from my point of view should be, I might be wrong of course, but should be fake, and even if we get them, I will be looking for the sell opportunities with the next divergence forming and completed. That's how I see the dollar franc, and this is all from the Forex view. What do we have on commodities? Gold is the first one, and the way I see gold, we are currently building up some sort of corrective cycle, so I would expect 2 waves correction or a movement inside this consolidation, but sell the rallies on the short term would be definitely my preferred direction currently. Why short term? Because I believe that once this correction is completed, we should see one more high until the daily divergence would be completed by itself. So short term, I would look to sell the rallies, and once we get the 2 waves correction with a bullish divergence or this range to complete, then we'll be looking to go and buy its bottoms. This is the way I see the gold. Definitely interesting opportunity, well, from my point of view. Now here is a question to you. And what do you think about the gold? How do you see this trading opportunity it provides? Let me know what you think about it in the comment section, and as well, if you find this useful, helpful, do not forget please to hit the like button. It helps a lot to the channel. And the last one on the list I have for this week, this is the Ethereum, which I find very interesting. Watching on the developing of this movement, we are in a beautiful slowing down, as you can see, impulsive wave, slower wave, very much slower wave, next one, and a rounding bottom with the bullish divergence. As long as this low hold, I believe we should be experiencing corrections to the upside. The 4-hour chart provided us the pattern of the higher highs, higher lows. The way I see that, buy retraces should deliver us a beautiful opportunities for the buys. I would be careful with if we suddenly go in one straight move below 61.8, then of course it will be a warning sign. But until then, I believe Ethereum could provide us some good buy opportunities. We might experience here retraces into waves or any sort of a range, but definitely would be finding and looking for these buy opportunities. So that's pretty much it for this week, the first week of 2020. Previous week was a non-farm payrolls week, some mixed, I would say, numbers from the non-farm payrolls week. Let's see what the market delivers to us from here to the first quarter and this wonderful year. Meanwhile, thank you very much for your time watching this video. I invite you once again to join us in the live trading rooms and to enjoy from all the trading opportunities day after day, coming together with a trading report. The link to join is right below this video in the description or the pinned comment in the comment section. Traders Academy Club. And thank you once again for your time. I wish you a fantastic week. Good trading. I'll see you soon with more videos and more ideas. Bye for now.